Good morning, and yeah, we're still morning. We're 9 minutes to noon. Today is, of course, March the 15th, Wednesday, and like I mentioned, we are only 9 minutes to noon. And overnight on Wall Street, we have a bit of stability returning back to the market. And of course, yesterday we have the release of the CPI number, which came in largely with an expectation. And of course, the overriding sentiment in the market is whether the contagion, the potential contagion in the U.S. banking sector has been arrested. So by and large, the fear that we can taste in the air as of last Friday is more or less subsided. So, but again, this crisis is by no means over. So if we get continuous rebound in the equity markets, there will be an opportunity, in my opinion, to establish a short position. So over there, well, we can see on the Dow Jones itself, we can see market rebounded, and now it's back above 32,000 from a low of 31,630 on Friday, and this likely to continue to extend higher today. Now, don't forget, tonight we have the producer price index. Although the CPI numbers came in last night with an expectation, we will have to take another look at the PPI numbers. Although the PPI numbers is not a major high impact data, but it is still an inflationary data nonetheless. And because we need to know what is going to happen next week on the 22nd when the FOMC actually meets, because if we get a series of horrible number in terms of relation to inflation being still hot, then of course the Federal Reserve hands may be tight. They may have to continue to high interest rates. Right now, the market expectation after the debacle last week, market expectation is that Federal Reserve may play an even hand, maintain the same amount at a quarter point height at the next FOMC meeting, which is scheduled on March 22nd. So again, technically speaking, if the market managed to rebound in the Dow Jones to 32,500 to 32,650, that bracket of prices which are highlighted here could be an area of opportunity. So once we can see a reversal signal that appears within this bracket of prices, I think that will be my cue to go back in to establish short position. Okay. Same thing for the S&P 500. We can see S&P 500 has pulled back from a high of 4,195 to a low of 3,808, and this is unfolding in a three-wave. But so far, this three-wave, this second leg of a three-wave, remember there is a first leg of a three-wave that make up the first wave of a larger degree three-wave. So this one is only just unfolding, so there is a missing leg to the downside. So my opinion is that if the market can rebound back to somewhere near 4,000, that will be my area of opportunity. I'm going to see how market can behave around this price range, and if the market cannot hold above 4,000 for long and started to come off, that would be my cue to go back in to sell. And my immediate target is 3,660, maybe 670, 3,670. Okay, that will be around my target range. Okay, then over the Nasdaq, we can see that over the last few days, as the Dow Jones and S&P 500 practically was sell off, the Nasdaq 100 was a sea of calm. On the relative basis, we can see that the drop so far is not as severe as what we saw in the S&P 500 or even the Dow Jones. On the contrary, we managed to see the Nasdaq 100 actually close on a positive territory, whereas the Nasdaq and the whereas the Dow Jones and the S&P 500 actually closed marginally lower. So again, we can see 2 days of consecutive gain, and this may be setting the stage for this Nasdaq to propel higher to as high as 12,600 to 12,700 thereabout. If the market goes into this bracket of price range, watch out for the same thing, reversal signal, because I think if the other major premier index is going to come off, Nasdaq would be hard fought to actually hold the line. They may actually have to come back down, and if that's the case, I think around 14,000 half is probably a good level to take profit if that actually pans out. Over in Asia, we can see that Nikkei actually continues to decline, although this morning on the back of a recovery on Wall Street, we can see that Nikkei actually is also rebounding, but this market looks inherently weak to me. So if we get a rebound back to 27,700 to 900 levels, I think that will be an area of opportunity. Look for a reversal signal to appear here, because I think we are missing one more leg to the downside, and this one leg will may take us back to 25,700 levels. Okay, over then In Hong Kong, we can see the prices initially started to rebound in the morning, but we are only at a halfway point for the day, and the market is beginning to come off again. So if by and large the market can somehow edge higher towards the 20,000 level to even 20,300, that will be an area of opportunity. Looks for selling signal for another move downwards, for equality move from a high of 22,700. Maybe the market may actually target 18,000. Okay. Over in the CSI 300, which is a premier Chinese mainland equity index, we can see that this market is unfolding in possibly a three-wave pattern, and this three-wave looks unfinished business. Market may be rebounding back to 4,050 thereabout. If the market cannot hold there, may come back down to below 4,000, this time targeting 3,860 to 3,920 levels. Okay. Over in energy market, we can see that crude oil has come off aggressively below the $71, but it has yet to take out the year low at $70.27. So basically, we have seen a major come off, and if somehow the market can actually rebound, an area of opportunity will be somewhere between $75.80 to $77. Okay, this I would think will cause a market to come back down again below the $70 per barrel. Okay, and over in the natural gas, although the market may have already bottomed at $1.97, this massive rally to $3.03 tell us that the market may have already bottomed out. So any kind of pullback is a buying opportunity. If we get a pullback as deep as $2.04, that would be my call to action. I'm going to buy massively this natural gas position, because I think the upside potential is humongous. Okay, over in energy, in precious metals, the reason why we can see gold having such a massive rally from just above $1,800 to all the way to $1,915 thereabout, and this entire move here can be attributed to only one reasoning, which is the fear that the contagion in the banking sector may actually spread, and people were looking for safe haven. Like I mentioned yesterday, whenever there is uncertainty in the market, what is called risk off, investors will typically find safe harbor by buying US Treasuries, especially the short dated one. And then of course the other one will be precious metals, and among currencies, the one that will be favored will be yen and the Swiss francs. So we can see that this move here is basically a safe haven rally, and if investors have a sense that this contagion is not going to spread and everything is controlled, there is a possibility the rally in gold and silver may actually unravel. Okay, so do watch out for the possibility here. Okay, over in silver market, we can see silver is also rallying from a low of just under $20 to a high of almost $22. So this again is a big move, but again, when we see in terms of the aggressiveness of this rally, it is not as aggressive as what we saw in gold market, and typically because this market here is capped by the February 22nd peak here at almost $22. So we can see $22 it is becoming a barrier to higher prices. Market came very close to breaking this level, but was stuck at $21.97. So it cannot go beyond. So right now, if the market continues, the longer it stays around here and not able to break out, there is a possibility it may pull back. So we will have to see what happens next. Over the dollar, we can see that the dollar has actually came off quite a fair bit from the high of 105.87, and now the dollar index is now trading at 103, very close to 103. But I think there's a possibility market may have already bottomed, and any kind of buy signals, it will be by Q to go in and buy the dollar index for the move to 106.25. Okay, when the dollar of course pulls back, all other major currencies will rebound, and we can see that very, very clearly in the sterling versus the dollar. Sterling was 118 all the way to 122. So this move, almost 400 points move, happens all within just 3 trading days, and there's a possibility if the market pulls back to 1.2, then I think that will be my cue to see if I can get a buy position, because I think sterling on the relative basis is a lot stronger for all the wrong reasons. Okay, so anyway, the market wants to go up, so we want to be buying the sterling. So when you compare the sterling versus the the euro dollar chart, you can see that euro dollars is not that it's not doing fantastically well. In fact, there's a danger that it may actually unravel all the gain that it has gained since the low of 105.24. So we can see that this market here does not have the same kind of impulsiveness as what we saw in the sterling. So there's a great danger that if the market actually unravels, meaning to see the dollar come back up again, all the other currency will have come down. I think one of the first one to come down in a big way is going to be the euro versus the dollar, and my target is 104.5. Okay, over in the Aussie, we have a bit of a different sentiment here, just purely looking at the chart and not worry about the fundamentals. We can see that Aussie is actually very, very controlled. There's hardly any big move over the last 3 to 4 trading days. So we can see that the market may be actually getting ready to go even higher. So the market can pull back. It did pull back already. Okay, you can see that yesterday the market actually pulled back within this bracket of price of 0.6630 to 0.6645. Within this 15 pip range is an area of opportunity. If the market gives us one more chance to buy within this area, take it. So I think the market may actually have a potential to go up to 68 cents, maybe even higher. Okay, dollar versus the yen. It does not look like the dollar yen has hit the bottom yet. 132.30 is the current bottom, okay, as of Monday. So we can see that the market is edging higher. I think the dollar strength versus the yen. Remember earlier on I did mention safe haven. There are a few things that you can find safe haven in. US Treasury, precious metals, and then in terms of currency, it will be Japanese yen and Swiss franc. So we can see that the dollar upside is actually quite limited. If the market cannot break beyond 136, it means that market participants are still worrying about the potential for a contagion to spread. Okay, so this crisis is by no means over. So if that's the case, the market participant is pricing in that this crisis is a lingering crisis and it can flare anytime now, okay, in the near future. So if that's the case, market rise up to 135, 135.80 level is an area of opportunity. If that's the case, I think the downside target is about 131, okay. Over in dollar Canadian, we can see that dollar CAC is also showing the same kind of tentativeness. Market pullback from 138.60, go down to 136.5. Market now may be able to go up to 137.5. If the market can do that, look for sell signal, because I think in terms of opportunity, dollar Canadian looks to be very, very potentially a big move here. Okay, so if I'm right, the market may go down all the way to 132.60. That is a big move, 500 pips potential move. Okay, so watch out for this potential move here. Over in Bitcoin, it rallied aggressively from just under 20,000 to 26,533 as of yesterday, and this is definitely not safe haven buying. It is safe haven buying, but for a totally different reason. Now, when SVF collapsed in just 48 hours, a lot of startup tech company has accounts with SVB, okay, the Silicon Valley Bank, and one of them is Circle. Now, Circle also issued a stablecoin called USDC, and because when they told the public that they are exposed to SVB, market was worrying about their stablecoin, whether it is going to be feasible. So there was a bit of selling in the USDC, the stablecoin issued by Circle, and stablecoin are always pegged, in theory, is pegged to $1 US. So at one point on Sunday, the peg was broken. It went out to 87 cents to the dollar, and that caused big institutional players to start moving their stable coin to convert them into the main token here, of course, will be Bitcoin. So there was a surge in Bitcoin purely because every institutions were trying to get out of stable coin for a time being and find shelter in Bitcoin. So that explains why Bitcoin had this big move. Okay, so we can see the prices are starting to come back down. Market rate currently trading just under 25,000. There's a possibility it grind lower. If the market ever go down to 23,000, that will be a good area of opportunity, and look for buy signal here, because I think this rally may not be over yet. If I'm right, this from 23,000, there is a possibility market may can run up to 28,000 thereabout. Okay, watch out for this potential move here. Over in Ethereum rise also for the same reason, from 1,670 all the way to 1,785. This big move here, if market pulls back anywhere near $1,580 onwards, look out for possibly a buy signal for the market to go even higher. Okay, so this is all I have for you. Now, don't forget, tonight we have the PPI numbers. It is not a high impact number, but because we are expecting FOMC next week on the March 22nd, so any kind of inflation data is going to be relevant. So do watch out for the release of the PPI number tonight. Okay, in the meantime, take care and be safe. Bye bye.